I'm all the way up. All the way up. I'm all the way up. I'm all the way up.
Standard. Good
Good
morning,
morning,
Vietnam.
Vietnam. Yes, it's been a while since I heard that.
Yes, it has. You
Love
haven't
it.
participated.
Back.
Welcome to the Money Matrix podcast, where smart money finds a smarter way.
Wow.
I'm Meyer
Wow.
Dalal, owner of MBank and proud host of The Most.
Wow.
Jason the Bird Mantione, loan officer.
And Canada desk. Alan Hastings, underwriter loan analyst. What's the bird, if I can ask?
The Jay Bird.
That makes some
His
sense.
Nickname from growing up.
Got it.
Your favorite topic, Alan, today, what we're going to discuss, because I think we need a little bit of fun in your life, and I want to see
Sure.
how you answer and participate in all of this. Mr. Trump, our president, has been in the Middle East, and he's made tremendous progress, unbelievable deals, and this impacts the mortgage market in a significant way.
You sound like him.
Even though you feel like nothing's been done,
Hey, I can't say nothing's been done. I can't say that. That's
he
for sure.
secured $742 billion from Saudi Arabia and Qatar, and a plane.
And a plane.
And a plane.
So
That's our topic for today.
Middle Eastern deals.
Yes. So what do you think about that?
You know, it's all controversial, but I can agree that a lot of the stuff will be good for the U.S. economy. I think that we'll go into the specifics of the details and the reasoning behind them and why they are controversial, but I think we can all say this will create jobs, this will help the economy.
Here's the double-edged sword, right? With all of this, could create inflationary pressure and rates could go here or it could come down. What are your thoughts on what this will do for us?
We're in a sensitive place as far as inflation. The Fed is still being slow. The Fed is not cutting rates. We're worried about inflation from the tariffs. In general, you would say, and I think that if anyone wants to jump in and disagree, please do, more jobs leads to inflation. Is that
Agreed.
so?
100%.
This could be one of those things that hurts the inflation numbers. It could be, but I think we have other problems that this helps.
True. That's what we're going to unpack here, because if you look at it, this is all inflationary because you have
Yes.
a ton of money coming in. You're going to create jobs, and all of this money is going to create spending, creating inflationary pressure. So now there's a flip side to it, and that's what we really want to dive into here. So let's just look at it. We have $600 billion from Saudi Arabia that they committed to.
Correct.
And that Saudi Arabia package includes $142 billion.
That much in arms from us. So that's on top of the $600 billion investment commitment, I believe.
100%.
So it's $600 billion plus $142 billion of arms purchase.
Yep.
And Qatar Airlines, which is owned by Qatar itself, is in a deal to purchase 210 wide-body jets from Boeing, valued at $85 billion. That's big numbers.
I think the total there was $742 billion coming into the U.S.
Plus the 85 billion.
No, all included.
All included.
Yeah,
Okay.
yeah, all included.
So
Oh, no, you're right. 740 plus the 85.
Plus
No,
the
you're totally
85.
right. Yeah,
Yep.
with the
Yep.
jets.
Yep.
now, in a matter of a couple of days, our great president secured almost $1 trillion worth of funds coming into the United States economy. Right?
what I
That's
voted for.
fantastic.
Okay. No, I just wanted to make sure that you were okay with that. So now
Yes.
let's break down what this deal is going to do for us. Straight, right off the bat, what's going to happen? We're going to have job increase.
Correct. Not just with Boeing. I think they had something like 35,000 jobs that were going to be created for the
Correct.
Boeing deal.
Overall, they're
More.
expecting 200,000 jobs, according to the White House, to be created with this investment.
So in total, 200,000.
200,000, not including the 35,000.
Got it.
No, it is 200,000 total. 35,000 of it will be the aerospace industry specifically.
That's a lot.
Yeah.
I think because we did the numbers, McDonald's pledged 315,000 jobs or something this summer, which I don't fully believe in, but that was more than they currently employ in the entire United States. So theoretically, these American jobs, 200,000, if they create that, That's more people than McDonald's employs across the entire country,
Wow.
created just from this deal in the Middle East.
So now the next thing, manufacturing, because of this defense agreement, the manufacturing plants across 14 states are going to have a huge influx of money, which is going to directly boost the GDP. And also, what we didn't discuss, so this is in addition to this, Alan, that your president did for us.
Thank God.
Thank you. Thank God. Saudi pledged to maintain current levels of the gas prices.
Yeah.
So that's between $75 to $85 a barrel, according to Goldman Sachs. That's huge because one of the biggest fluctuations is the cost of energy. And that really impacts our numbers, impacts everything that we look at.
You're talking about that directly impacts inflation calculations.
100%, because energy is a big factor into what they calculate in the core CPI, PPI, GDP, all of that stuff.
Got it. Yeah, I think the jobs numbers are impressive. I think that if we keep inflation down, I can't argue against a strong economy. I'm not going to sit here and be like, I don't like President Trump, so I don't want good things to happen. I do think the primary reason people are upset is not the numbers. If those numbers are true and everything comes to fruition, then that's just positive numbers. But the main controversy follows the countries themselves and why those deals were not already in place and why we weren't friends with them originally. I think we were already kind of close with Qatar, but Saudi Arabia is not the biggest U.S. ally, right? I don't think you can take away the fact that these will help the economy, but I think that most people's contention is we don't want to help those countries.
Personally, for me, Qatar is worse than Saudi.
I can
just
get behind
because
that.
they're known historical patterns of who they've supported. But overall, there's a level and degree of people getting over it and realizing the Middle East is a real thing. Dubai, United Arab, this whole area as a whole
Yeah.
is going to become a serious contender in terms of wealth and luxury. I mean, look at what's happening in Dubai, how much
Right.
money is flowing in there with the kind of wealth there is. So there has to be someone that's going to say, hey, I think they said that no president of the United States has gone to the Middle East person for how long was it?
I don't know, but like the prince said, right?
20 something years or whatever the
Yeah.
case may be. But I think it's very forward and progressive thinking to say, hey,
That's interesting.
these guys have a ton of money. Why don't we get them to invest? And they've made deals with NVIDIA. Starlink is hooked up in there. This is your favorite topic. Your friend, Elon Musk. They're probably going to end up putting it on all their airlines and all of that stuff. It's good. It's building economy, building growth, building infrastructure that we badly need and has been missing for so long.
I'll jump in there and then I'm sorry, Jason. I saw you gearing up to speak. I'll let you go right after, I swear, but I have to before I forget.
Yes, absolutely.
I'm on board with the numbers are good, but I think there's a reason that we didn't already have this investment. Trump specifically said, I'm ready to give the Middle East a chance. Like, I'm ready to let them join the global economy, really step up. He literally said, I'm giving them their chance. And it worries me to think of the idea that we're looking at it as we should take advantage of the fact that there's money there and get a piece of the pie, instead of realizing that these people have histories of doing things that not only harm our allies but us, right? Like Syria during the Iraq War, all kinds of different things about Qatar. There are things where these countries have directly hurt the United States. And we're like, okay, you know what? There's money there. You got away with it.
I think there's a lot of, scars and old wounds. Today's Middle Eastern countries are very different than what they were 10, 15, 20, 50 years ago.
Yeah.
These are all much more progressive, forward-thinking business.
Is that true? Because when you say progressive, you're thinking business. As a businessman, you're immediately like, they're investing in AI, they're investing in infrastructure. There are things where these people are clearly current in how they're seeing business and opportunity. But when I think progressive, I don't think AI, I think of human rights.
I think human rights has come a long way too. Maybe. I really do. I believe in Saudi Arabia, women are driving now and they have much more rights than they did before.
Right.
And, you're not as much required to wear a hijab where, like, in Iran, it's something that's like,
yeah.
I had a client in here last night and she said they're Iranian and they're working on a project with us because they're buying a piece of land for their business.
Yeah.
And the mom happened to have been in Iran 5-6 years ago, and she said it was terrible. They had to wear hijab, everything, where previous it wasn't as bad.
Yeah.
But, I think overall that people are hopeful. Her and her son were saying, we're hoping that the regime will change and someone will come in and change the thing, because the conversation was the whole Middle East is changing.
Yeah, and I hope that it does. And obviously, you say the word progressive, and usually the progressive thing is to be like, let's give these people a chance, right? Progressive means moving forward, right? Let's not look back. And I support that. So I think instead of getting too political on it, I'll agree with you that economically, this looks like a good idea for the United States.
Awesome.
Well,
So
let me-
now, go ahead, Jeff.
So I look at it in a perspective of a father, the head of my family, my wife and my 2 children. And I look at it very simply. They're going to buy a lot of this stuff from somebody. Why not be us? Very simple, right?
It's true.
Someone's going to sell those kids drugs. That's it.
Somebody's going to sell them planes and all this other stuff. Let it be us. That's one way that I look at it. To your point, they've done things to hurt us. China and other countries are hurting us because they're taking money from us. They're charging us an obscene amount of money for things. Other countries also, not just China. And that's hurting us. That's hurting people in my family because they can't afford to pay their bills right now. They're hurting us in that way. So I know we have a history, but I feel that the financial hurt is a lot worse than us moving on and having a new relationship. And like Mario said, it's different times. It's different people in charge. I'm all for if this is going to help the economy.
So we're all thinking, let's focus on the U.S. then.
Absolutely.
Got it.
It's all about us, right?
The mothership needs it. According to the Treasury Department, Qatar and Saudi own about $175 billion of U.S. treasuries currently. Now, with this new agreement, it's likely that it's going to significantly increase their holdings as well, because it's not just going to be all straight
Cash.
It's
right.
going to go into the treasuries where they're going to get a yield on it. Here's a $600 billion check, and that's it. That has significant implications on the mortgage market and where your rates are going to be. And this is now where it gets interesting, because if you really look at it from a Fed economic perspective, the 10-year yield right now, which is the barometer that impacts mortgage rates, it's been around 4.5 right now. Up a little bit, down a little bit, but that's where it was. At one point, it was 389, and after everything went crazy, it's hovering around 4.5. This right now is very elevated, ultimately, considering where we are with regular rates are 7%, non-QM rates are a little bit higher, 7.75, whatever the case may be. So if you're seeing a influx of money into the Treasury, and that's a demand, that overall offsets the pressure we have to continuously raise rates to offer higher yields in order to gain favor and gain more money into
we
the
don't
treasuries.
Convince people to buy because we've already found a buyer.
Correct. So you have an inherent buyer already. Now, they're saying if just 20% of their money goes into the treasuries, that's about $120 billion. Wow. Imagine, that's such a significant boost for the bond market. And that's
Right.
according to PIMCO. So regardless if the stock market goes up or down, as the stock market goes up, bond markets have to trade that same way too,
Right.
because you need to pay more in order to attract the yield to go into the bond market.
Yeah.
So now this is really interesting. According to the Mortgage Bankers Association, for every 100 basis points decrease in the 10-year, it translates to somewhere about 50, 75 basis points to a 30-year mortgage. So if we can see that influx from Saudi Arabia, according to JP Morgan bond analysts, they could see a 25 to 50 basis points drop in the rates.
So conventional back under 7, non-QM almost
More.
down to 7.
It's closer to 6.75, because right
Wow.
now you're at 7. A half a point is taking you to 6.5.
Right.
And that's without even the Fed getting involved.
So ultimately, this spread, the stock market can continue to do well,
Correct.
and then the bond market will also.
Correct.
Got it.
So you're sort of betting against one or the other. If you want the stock market to do well, the economy feels good, consumer sentiment feels good, then the bond market's going to take a hit. Rates will never come down, and you have your affordability crisis, you have everything. But now with this cash infusion, JP Morgan thinks we could pick up as much as 50 basis points without even a single Fed rate cut.
Wow. If that happens, does the Fed still lower rates or do they not need to?
I think they're still going to take a wait and see approach. I really do. But the pressure of them doing something and not being completely reactionary when it's too late, I think they're going to be pressured into it just by the fundamentals of the market. Because look, today's PPI numbers came out and it was a huge miss.
What does that mean?
They were expecting a increase in the producer price index of 0.2%.
And
It actually came in minus 0.4.
so the PPI is which set of
Producer
figures?
price index. That's
Yep.
actually what the consumer, me and you, spend.
Got it.
So it's cooling. It's showing not as high of an inflationary type of structure
Things got cheaper.
from a producer price index. Now, today, Walmart's CFO came out and said, listen, we're trying to absorb as much of the cost as possible, but we may see some price increases because of the tariffs.
Right.
So you don't know, but there's definitely significant impact in all of this. And that's really what I'm excited about, because we don't have to depend and sit and hope and pray for the market to get destroyed, for people to be unemployed, for the market to slow down and shit to happen in order for mortgage rates to get better so homes can be more affordable.
It's a guilty conscience you have for mortgage rates to come down. You need bad things to happen.
I think this is pretty exciting stuff. I'm hoping from a business perspective, clients and just the general consumer don't take that sit and let's wait approach and see what happens. And they're actually proactive, because I can guarantee you from our client base, who's the self-employed entrepreneur, investor, independent contractor, they're going to look at this and say, this is a major opportunity.
I'm curious what, Jason, you've heard, because I know you've taken tons of calls this week. Is this week kind of different than last? Are you hearing anything about these things? Are people saying anything about the deals? Do you hear current news when you're on the phone with these clients?
Well, obviously, you know that I deal with the foreign national end of the company.
Right.
Most of that is Canada right now.
Mm-hmm.
And one thing I can tell you, which is a little off topic, but their election had a lot to do, I think, with our influx of calls. Because literally the next day, I had an increase of at least 50%. The phone ringing.
Because if a Canadian's calling in and they're like, the U.S. is a smart place to invest now, is it primarily because Canada is not a good place to invest? Or do they hear this stuff like the U.S. economy is going to do well, I'm going to get a piece?
So funny that you say that, because I spoke to a potential client today, and it was a lengthy phone call. We talked about a lot of things. And I always like to bring it up to the clients like, hey, listen, the phone has been ringing a lot more now in the past couple of weeks. Come back with their election, and people they know, family members, close friends that are making the move, have made the move, are saying that it is a way better place to live. There's a lot more opportunity. They love it. The woman today, 2 of her friends moved to Florida and can't say enough great things about it. And then you talk to me, the spokesman for Florida. I love it. So now she's getting all this, but I would definitely say that from what I can say, their election, and I'm getting a feel from other clients that I talked to that they feel it's a better place to be right now.
Do you want to use this as like a tool? Is this in the future, your next phone call, you're going to say like, listen, the U.S. market's about to take a really positive turn.
Absolutely.
You should get in first, or should I wait until rates come down a little bit and then get in? What do you think?
I always say my opinion, what I feel, but yeah, I'll definitely bring it up, because we talk about a lot. They don't just talk to the client. Okay, this is what they want to buy a house. Okay, here's your rate. We talk about, I want to know about them. They want to know about me. And I will definitely bring this up.
They're more current. They're not looking that far ahead.
But I think the Canadians are a lot more reactionary right now. They're in a, oh my God, fight or flight situation, trying to figure out,
He's right.
What am I going to do? Their process is significantly longer, because if they even start today applying for a green card, it's a 2-3 year process. Our counseling to them is, hey, according to 3 Canadians I spoke to this morning, Canada's beyond decimated. They're looking at making investments outside of Canada immediately. And then they'll figure out their visa and licensing like that, just because there's nothing going on there. So they feel like, they said it's going to be a third world country. That was their words. The craziest thing. They said Canada outright is going to be a third world country with the way it's going. and we want to get out of there before it gets too bad.
Thank God they're coming to a place where we have a brighter outlook right now.
Of course. This is something interesting from the National Association of Realtors. They're estimating that if we could see a decrease of 0.5 point on the mortgage rates, that will bring in 750,000 potential buyers that are sitting on the sidelines. And that may be because they're hesitant, they're waiting, they're on the fence, or they just can't afford it. And now with that little bit of extra lift, they can afford.
Do you think those are first-time home buyers or are they repeat buyers?
I think you have a lot of step-up buyers. You have a lot of investors. I spoke to two brothers today that own a property in Brooklyn. And, you know, we were going back and forth. They're in an interest-only loan. And one brother says, we paid $156,000 just in interest, and we haven't paid down anything. The rate's 9%. They thought they got a great deal. So we just reduced their rate. They're doing a rate and term refinance. And we're taking them from 9% to 7 3/8, 7.375.
That's crazy.
It's not costing them anything. Everything's being rolled into the refinance. The only thing that we're doing for them is just charging them the appraisal that they're paying out of pocket, and they're qualifying with just the rental income. That's it.
So he's saving over 1.5 of interest.
So they're saving on their payment $300 paying principal and interest rather than just paying
interest. Wow.
Purely interest. So there are people like that in the market. We have people that are now actively looking. This group from Canada I was talking today, they're buying and they want to do a huge build in Deerfield Beach. They want to buy something 1 block off the beach in Deerfield Beach because they feel there's such opportunity. So the time now, if you're smart, in my opinion, is to get in now. Don't wait. Even a client told me yesterday, she's a realtor. I tell all my clients, don't marry the rate. Marry the property, you're dating the rate. And I said, did you hear that from me? She's like, no,
I've heard that from you.
But now let's look at, like, we're always optimistic here, but I want to shed some light on the downside. What are the downside risks we have here?
I mean, you talked about inflation already, right? More jobs, more money in the States equals inflation. That's just the math.
Because they spend more money.
Yeah, and the costs will go up as, you know, that's just the way that it works, unfortunately. But what about the wealth gap? Is that something that you've thought about before? Is that something that you discuss with the clients?
I really don't, but it's very true because the areas that are really going to benefit from this is defense, technology, and energy.
And do you think those people are the median? Is that like your normal everyday blue collar guy, or is that a specific class of people?
Listen, I think that's more of an elevated class of people that and our
financially.
Yes, financially. Our clientele is generally in the higher bracket. They have a propensity to earn more money. They're self-employed, independent contractors.
Right.
But we do have a lot of, you know, technology related and these type of fields paid in various ways that not all traditional lenders can qualify them.
A lot of them are contractors. A lot of them get RSUs, stocks, that kind of thing.
Correct. So there is definitely going to be a wealth gap created, which kind of sucks. But unfortunately,
well, it's what you're saying earlier about the first-time home buyers are probably not the people jumping into the market when these changes happen. It's the people who can step up. It's the people who can invest. And that's something to consider. I mean, you're going to have a healthier economy numbers-wise, but it's important to think about those negatives for your own conscience' sake. But then what about deepening our ties with people that we don't have great historical relations with? If we start to become dependent on Qatar, Saudi Arabia, Syria, places that we've historically not had good relationships with.
I don't think we'll ever be dependent on them. I think there's more of a dependence for them on us than the other way around. The U.S. has a lot more to offer.
I'll give you one example because I agree with you as a large whole. But what about you just said Saudi Arabia is pledging to keep oil production at a certain level so our gas prices stay the same? What if one day they break the promise? That's an example of something where we're kind of hoping
Trump will blow them up.
But remember, they always say the U.S. has so much access to oil and energy. You can start making friends with your up north, the Canadians. Right now, call me a conspiracy theorist, call me crazy, but I think a lot of this also is Trump saying, hey, listen, we played so much in the sandbox with just Mexico and Canada. Now we're moving up and leaving the little sandbox and going into the big boy sandbox.
Interesting.
I think there's a strategy involved here because if you pay attention, not once has Trump mentioned anything about Canada or Mexico making deals. It's been very quiet. Historically, he was a big proponent and a big front runner for these two countries. Now they're not even on any radar because he's set his sights so far up. Maybe this is just one thing, and then going back to Canada and say, hey, listen, I'm not dependent on you for energy as much anymore. If you want to play nice, we can get back into better terms.
I think that also with Saudi Arabia saying, hey, you know what, we'll just break the promise one day. I don't think anybody's going to want to miss the boat with this. I think everybody wants to make money. Everybody wants to be involved with Trump, whether they like him or don't like him, but they are all anticipating what his next move is going to be. They want to be involved because they don't want to miss out. They're on the money, and I don't think anybody wants to get off yet. They just want to see what's going to happen. I think you're going to have everybody kind of sticking to their pledges and their promises right now, and that's my gut.
The last thing before we roll out here, you told me today where Apple said, you know what, we're going to leave China and we're going to go to India
for production. Trump today talks to Mr. Tim Apple. He says, if you move to India, we're not going to be friends anymore. He said, I'm not going to like that.
He's a big proponent of bringing everything here. What do we take away from here? 742 billion coming in,
plus the plane deal,
plus the arms, plus
some promises on oil prices.
We forgot with the gold.
It's got some carpets, some showers.
We got the stability of oil and that happening.
Yes. I think we'll see the benefits of this in the mortgage market when those infusions come into the bond market. So do you foresee in the short term or the long term rates coming down, refi opportunities, or do you think get in now?
I think you have a window. It's going to probably take 6 to 8 months to fully make sense of everything till you see the effects of it, right?
Yeah.
So I think anyone hedging on the sidelines, get in now.
Okay.
It's imperative that you make that decision by refinance, and then you can always do it again.
Yeah, because
why leave money on the table? At some point, will the rates come down all the way? And even if you pick up a half a point, for a lot of people, it's not going to make the hugest difference. It's a couple of $100. But at the end of the day, you're taking advantage of an opportunity.
What you said to me the other day, what I've told clients about, is you brought up a great point. It's a two-step process right now. And when I speak to my clients about it being a two-step process, they're in love with that. Can you touch on that a little bit, what you mean by that?
Sure. I mean, anyone, in my opinion, who buys or refinances in today's market is guaranteed to refinance in the next 2 to 3 years. You'd be foolish not to.
Right. At
some point, we're anticipating rates to be somewhere around 5.5%. I think that's where they'll settle. So if you're getting in at 8, 7.5, 7 3/4, whatever, you have a potential 2-point pickup on the refinance. So whatever you do today, you're taking advantage of capital appreciation, you're taking advantage of opportunity, you're taking advantage of what other people don't see. Now, if once rates start coming down a little bit, you're going to get an influx. If you get that half a point, 750,000 people are going to hit the market, right? That's what the analysts are saying. What happens there? They're all looking for the same areas. They're all looking to buy, and there's not enough inventory. When there's not enough inventory and all the sellers realize that there's 750,000 people coming, they're going to jack up the price.
The window happens, like you just said. If there is a dip and that window occurs, if you bought the property before the window, that price spike is going to be massive. I'm not all for flipping. I'm not watch the episode. I'm not a big flipper. No. If you were to purchase for a short-term holds, you're going to make a lot of money when those prices spike.
Instant equity.
A true value because you bought a couple months before everyone else.
Yep.
I like that. Instant equity.
Wow.
Anyway, gentlemen, thank you so much. Have a great day. God bless. And we'll see you guys later
with the next deal.
Good night.